Hey, what's going on? Nathan here from Argenta.com, and today's video is all about the coronavirus outbreak, okay? I've had tons and tons of different people asking me, Nathan, what are you doing with your portfolio? Are you going to be selling your stocks? Is a global recession happening? And maybe you're thinking that yourself. Maybe you did research and you came across this video because of that reason. You're not sure what to do with your stocks, your investments. Should you sell? Should you wait? Is there going to be a dip in the market? And just eventually the bullish trend will continue in 2020. No one knows what the predictions, no one can predict the stock market, and ultimately that's the strategy that I've used now for years. Is just the stock market will have dips up and down, up and down. You don't know when a recession is going to happen. Can this cause issues in the stock market to drop? Yes, and it has. And that's why people are panicking and don't know ultimately what to do. So in this video, I'm going to be sharing with you my opinion. I'm not a financial advisor. I'm going to be sharing with you my opinion of what I'm going to be doing with my stocks and my investments based off this current outbreak and the dip in the stock market. And then also first, before I do that, real quick, I'm going to be sharing with you a video here right now from an analyst of CNBC, a video straight from them, and just sharing with you his own opinion on what he recommends or what he feels like the market will do based off the current conditions in the outbreak of the coronavirus. So here's a video real quick for you.
Welcome to Trading Nation. I'm Eric Chemi. The coronavirus scare contributing to the Dow's triple-digit point drop on Monday. Our next guest warns the outbreak is a reminder that shocks are more frequent than investors often anticipate. Yale professor Stephen Roach was the chairman of Morgan Stanley Asia and was in China during the deadly 2003 SARS outbreak. He joins us on the phone right now. Welcome, Professor Roach.
Thank you, Eric.
So let's get right to it. What is your reaction to the latest developments surrounding the coronavirus, and obviously include some of your own history being such a frequent expert in China and living there for so long?
Well, look, it's a frightening outbreak, especially when it spreads as rapidly as it is. Unlike the experience of 2003, I think the Chinese officials are moving far more aggressively. They're being more transparent in their actions, and they're taking far more severe measures in terms of multi-city quarantines and restrictions on inter-city travel than they did in the early days of the SARS outbreak. But, that doesn't mean that this isn't a serious problem that will continue to cause problems for several months to come.
What is the likely impact of the coronavirus on China's economy and the global economy, especially since they still face so many challenges?
Well, we don't know the answer to that, but I think an informed guesstimate comes from studying the experience of the first half of 2003, where the annualized growth in nominal GDP slowed by about 2 percentage points from the second to the third quarter of 2003 in response to SARS. If you sort of model that in the context of today's Chinese economy, the problem is that the Chinese economy is growing a lot slower than it was back then. It ended last year at 6% real growth, and a comparable impact this time around could temporarily, I would stress temporarily, take Chinese growth down into the 4 to 5% range.
4 to 5% range, right? That's a lot less than we are familiar with coming out of there. What about just the global economy in general? So we've got the Chinese economy, the global economy. Do you think it can withstand something like this if China were to slow down that dramatically?
Well, again, a temporary impact, one that lasts, say, 3 or 4 months, followed by a sharp rebound, most likely would not do lasting damage to the global economy. But the point to make here, and this is true of China, it's true of the broader global economy, it's actually true of any economy. When a shock hits an economy that is already in a weakened state of growth, and that's the case right now for China and the global economy, I'd even say the U.S., big shocks for weak economies that don't have cushions to withstand them could lead to unexpected recessions. And so you can't just dismiss this as a non-event in the context of what appears to be ongoing growth around the world. That growth is weak and lacking in resilience it might otherwise have.
And then, what could investors here in the U.S. expect? I mean, let's say a lot of people may think, hey, this is a Chinese issue, maybe it's a global issue, but maybe the U.S. is somehow insulated from it, at least from a trading, investment, economic point of view. Do you agree with that sentiment, or would you be more concerned even for a domestic-focused investor?
Well, this is not an event that is really having a direct impact on the U.S. Certainly there are some sort of indirect impacts that might affect, multinational travel and leisure companies. And as long as the U.S. authorities are able to limit any spread of this virus to the U.S., it's not a big deal. But again, China is a big piece of the global economy. It's about 20% of world GDP, and if the shock is more of a lasting one than just a temporary blip, that shortfall of global growth will certainly have an impact on the U.S. and other major economies that are linked to global growth as well.
And obviously, you spent so much time there. You've been there for years, living there. The way that the government, the way that their health system, the way that they would handle something like this for an American investor, American citizen who really hasn't spent a lot of time in China and doesn't understand how their government works differently from ours, what do you think is the approach that, let's say, a U.S. investor might want to know that, hey, in China they would do things differently than how the American government might handle this same crisis?
Well, the important thing is to just look at the difference in the response this time versus early 2003. I was in China during that period, and there was denial and an unwillingness to recognize the severity of the problem. And they've clearly learned some lessons. They're much more aggressive in disclosing the severity. You have the leader of China, President Xi Jinping, talking about how worried he is. He didn't have any of that back then. And I remember in Beijing, they built a SARS hospital in 2 weeks once they finally opened up and admitted it. And no one could believe that could happen. And they're doing it again, but they're building 3 of them in Wuhan in a couple of weeks. So a centrally directed system can marshal resources in ways that we can't even conceive of in this country.
Stephen Roach, I appreciate you coming on today and giving us your insights, your analysis, and your take here about the coronavirus, how it's affecting the economy and the trading environment in general. Appreciate you being here.
Thank you, Eric.
That was Stephen Roach, a Yale University senior fellow. He was also previously the chairman of Morgan Stanley Asia, so we appreciate Stephen Roach being here on the show. Thank you for watching Trading Nation. I'm Eric Chemi. We'll see you next time.
Alright guys, so I hope you received value from that video, and ultimately, really for me and my portfolio, what I'm going to be doing is I'm just going to be paying attention to the markets each and every day. I'm going to be holding the stocks in my portfolio that I have. I'm going to be holding those investments. I'm not planning to sell. Alright, I'm just planning to hold what I have, and just depending on the news and again, and all the different news articles that come out, all the different videos, just pay attention to the news and the outbreak. And ultimately, I'm going to treat this just like the SARS outbreak in 2003, okay? I'm just going to hold on to my portfolio. When the market starts to correct itself again, I will start putting more money in. So whether it does take weeks or months, I'm going to be more cautious about putting money into the markets, okay? And again, just paying attention to the news, paying attention to our portfolio, and just seeing what happens. Again, we don't know what's gonna happen. Will a recession happen? I don't know. We don't know, all right? But there's opportunities for you to do whatever you want really at this time. If you want to sell your stocks in your portfolio, do that. If you want to hold, like I'm doing, do that. So again, it's completely up to you. Do your own due diligence, do your own research, but that's ultimately what I will be doing in my portfolio. I'm not recommending that you do the same. I'm not a financial advisor, just my opinion. I'm going to be holding onto my stocks in my portfolio and seeing what happens, in the markets. And I understand that a dip can happen with anything in the stock market. like I mentioned before at the beginning, it's going to go in waves. It's going to dip and it's going to go up, bullish and bearish. So it's going to continue to go up and down, up and down. And at certain times of the year or years, there's going to be a big dip in the market, like there was right before, right around the holidays of 2018. There was a really big dip in the stock market. All right, so I hope you guys received value from today's video. If you did, go ahead and smash that like button. Leave me a comment below, letting me know the value that I received. Any feedback you can give me is greatly appreciated. And last but not least, don't forget to hit the subscribe button as well as the bell notifications button to get updates of any time I come out with new videos here on my channel. Guys, have a great rest of the day, and I will see you in my next video. Take care.